Hello traders, welcome to Ford Revolutionary Forex Institute. I'm Kosinati Komo, the founder and a senior trader of Ford Revolutionary Forex Institute. So today traders, we are going to look at the euro versus US dollar. So for now traders, we are on the monthly time frame because you know traders at Ford Revolutionary Forex Institute, I mainly trade like long-term trades or swing trades. So actually, I mainly focus on the larger time frames. So we speak of a monthly time frame, where a monthly time frame and a weekly time frame, which I use these two time frames just to look at the bigger picture of the market. And then for daily time frame, I use daily time frame just to execute the trades. And then for 4 hour time frame, I use this time frame just to monitor the running trade. So for instance, if I have a running trade, then I will use daily and 4 hour time frame just to monitor the running trade. Okay, so now looking at the bigger picture of the euro versus the US dollar, so we can see that the market is moving on a downward direction because the market has been making lower lows, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. It seems like the market started to be bearish as from let's see. So it seems like the market has started to go bearish as from May 2008. So you can see that the market has been bearish since from May 2008 up until even now. It seems like the market is still down. So this bearish trend line has started from May 2008. It's more than 10 years. It has been moving downward more than 10 years. So for now just to get a bigger picture of this setup, so we can see that the market, so we have this trend line, we have this downward trend line. So we can see this downward trend line because we have higher high, higher low, sorry, lower low, lower high, lower low, lower high up until now. So we can see that we have first lower low, sorry, lower high, second lower high, third lower high, fourth lower high. So you can see that we can see that we have this trend line. So we connected these lower highs in order to draw a valid trend line, because in order to draw a bearish trend line, you have to connect the lower highs. Yes, you may connect the lower lows just to make a channel, because yeah, it seems like we also have like a channel here. We have this running channel, but we are not interested in a channel. We are only interested in this trend line going down. So we are interested in this downward trend line. So for now, it seems like the market is on a downward trend because the market hasn't break this trend line. Secondly, we have this last higher lower high. So we expect the market to change the direction if the market breaks this downward trend line, or and if it's possible, the market might also break this last lower high, which is around 1.22358. So for now, in terms of the bigger picture of this currency pair, which is Euro USD, so we can just say that the market is still on a downward direction, or is still bearish. So now moving to lower time frames, just to look for the movement of the setup. So as you can see traders, that's on the monthly time frame, just to quickly to remind you. So you can see that we have wave 1, which is red in color, which is a bigger wave, wave 2, wave 3, wave 4, wave 5, going downward. Okay, so we know that if the market has made 5 waves down, it is highly possible that the market can start to move to the opposite direction. So since now we consider the market is on a downward direction, and it seems like the market has also made like the 5 waves down. So we can expect the market maybe now to change the direction, maybe to form a correction, or just to form another impulsive wave to the upside. But for now, we know that the market is on the downward direction, in terms of, because we were able to identify wave 1, wave 2, wave 3, wave 4, wave 5. So we're able to identify big 5 waves going down. So now going to weekly time frame quickly. So now we can see that on the weekly time frame, we are able to see the leg between wave 4 So let me just remind you, when you speak of wave 4, we are speaking of this wave 4. So now when we want to analyze this leg on a bigger picture, so now we're supposed to open like the weekly time frame. So let's go to weekly time frame just to see the movement between wave 4 and wave 5. So we can see that on the wave 4, wave 5, so we have this downward trend line. So we do have this downward trend line. So it seems like the market has broke this downward trend line because we have lower low, lower high, lower low, lower high, lower low, lower high. Even though we can't, even the market didn't test the trend line, but we know that this is another lower low, lower high, lower low. So for now, we know that the market has been moving down, and we also have like the valid trend line, which was very stable, and this inner trend line within the bigger picture. So it seems like the market has broken this trend line because we have this impulsive going up, which formed wave 1 or wave A, which is blue in color. So for now, we understand that the market has broken this downward trend line. So let's let's zoom this in just to see the bigger picture. So we see that we have this wave 1, wave A, which is blue in color. And so let's erase this so that we can get a bigger picture. So now we see that we have this. We also have we also have wave 1 or wave A, which is blue in color, which is made of 5 waves. We have wave 1, wave 2, wave 3, wave 4, wave 5. So we also we were able to draw a valid trend line also because we have higher high, higher low, higher high, higher low, higher high. And it seems like the market has broken this upward trend line or this bullish trend line because we can see that the markets after the markets fi- finish this fifth wave, then the markets move down aggressively and broke the trend line, the upper trend line. So it seems like the market might be moving in a downward direction. Maybe two because we have like wave A, wave 1, wave 2, wave 1, wave A. So maybe the markets may move to this direction, maybe to form like wave A, wave 2, or wave B. Okay, which will be the correction of wave 1 or wave 1 wave A, which is impulsive wave. So for now, in order to get like the bigger picture of these breakouts which happened within wave 1 wave A, we have to open like we have to open like a daily time frame. So let's open now the daily time frame. So on the daily time frame, we remember that on a weekly time frame we had this trend line which was going up. Okay, I guess you still remember this trend line which I draw on a weekly time frame within wave 1 and within wave 1 or wave A, which is blue in color. And then we said that then this upward trend was broken aggressively, and the markets form wave. So for now, when we are looking at when we're looking at when we're looking at the daily time frame, we can see that the market has formed wave A, and then we're expecting the market to complete wave B because we can identify like we have wave A, wave B, wave C. So because we know that based on the elusive wave theory, wave B is formed by 3 waves, which is wave 1, which is wave A, wave B, wave C. Or sometimes it might be formed by wave W, wave X, and wave Y. So, but in this case, we know that this might be a zigzag pattern. Okay, so a zigzag pattern is formed by wave A, which is impulsive wave, and then it's formed by wave B, which is the correction of wave A, and then wave C, which is the final leg. So now we're expecting the markets to climb up around around 1.12334. So we are expecting the markets to rally up to this area, and then after this area, and then we can expect, and then if we see any possible bearish pattern around this area, then we can execute a bearish trade. But if the market breaks, for instance, if the market breaks like the end of wave 1 or wave A, or which is the start of wave A within wave 2 or B, which is blue in color display. So if the markets break the start of wave A, because now we're expecting A, B, C, which is a zigzag pattern. If the markets break this level, then we will just we will just wait for the market and see what it does. So for instance, if the market moves down after it breaks this level, we will not enter a trade. We will wait the market to come down to this area of 0.99351. Thereafter, we can execute a bullish trade, which will which will be the extension of wave 1, wave A, which is this blue, which is this wave, which is blue in color. So for now, what we're expecting the market to come to this area, which is 1.12334. If the market comes to this area and form any any bearish pattern, for instance, any bearish reversal candlestick pattern, then we can execute a bearish trade. But if the markets break this level, which is the start of wave A, then we will wait for the market to see what the market does, because at this time it's unclear where the market will go. But in terms of our analysis, we are expecting the market to complete the zigzag pattern within this black wave B. Thereafter, we can execute a trade within wave C, which is the extension of wave A. So traders, this is all we have for Eurusd. See you tomorrow for another analysis. Thank you very much for watching. Goodbye.